Hello friends, a warm welcome to today's video. In today's session, we are going to explore what the quarterly performance of the crypto industry might look like in the upcoming years of 2024 and 2025. Before diving into the events of 2025, it's crucial to grasp the significance of that year. Why is 2025 so pivotal? Let's begin by discussing the cycle, alright? So, even though the cryptocurrency industry is still relatively young, we have already witnessed several cycles occurring 2 or 3 times. There is a cycle that rises and falls over the course of 3 years, meaning there is a rally and then it declines for 1 year. In general, this is the calculation and you will understand it much better now. Therefore, there is a complete cycle that we take into account within the crypto industry. The entire duration is a span of 4 years, thus, a 4-year cycle is taken into account. When examining such a cycle, one was completed in the year 2017, another in 2020, and the next one in 2024. Approaching it from this perspective, the 4-year cycle can be seen as having 3 phases, meaning that a single cycle can be divided into 3 distinct segments. The first phase is known as pre-heli, the second phase is post-heli, and the third phase is referred to as bearish. Okay, in pre-halving, the price stays for about 17.6 months on average based on the last 3 cycles. Sometimes it's all months, other times months. In post-halving, it averages months. In bear space, when the price drops, it lasts months. Alright, so let's take a look at its chart based on the given time frame. Before the halving period, also known as pre-halving, the price tends to fluctuate, moving up and down. It doesn't provide a significant profit, nor does it result in a substantial loss. It just keeps fluctuating in this manner. Then we have the event called halving. Now, what exactly is halving? Well, halving occurs every 4 years, and during this event, the block reward for Bitcoin is adjusted. This means that if your computer doesn't, your miner includes a Bitcoin block, which means the Bitcoin reward amount you receive is reduced by half. This process is known as halving, and it occurs every 4 years. The most recent halving took place in April 2024. Prior to this, it occurred in April 2020, and before that, in April 2016. So before the halving event, the price tends to consolidate, moving up and down over a period around 17 to 18 months. Then after the halving, it will continue to consolidate for approximately 15.6 months. There will be a pullback during this time, and following that, the price will rise, okay? This marks the prime of every cycle. Okay, after this, the price will decline for about 1 year. Therefore, the total duration of this phase is roughly 3 years, and this specific part lasts for 1 year. So, I hope by now everyone has understood that the cycle being discussed, whether it's a bear cycle, a bull cycle, or a bull run, is indeed approaching. This cycle is determined based on the phase where, in the pre-recent stage, the price is simply consolidating and will stay in one place like this. Then, during the post-recent phase, there is a slight consolidation pullback, and after that, it will rise, forming a banana shape. In the bear phase, it will come up from here and then drop a little. These are the 3 phases within a cycle. One complete cycle lasts about 4 years, which involves handling and the US presidential. Elections happen around this time. We'll see it in the next elections. Now let's discuss, alright? I'll remove this. So if you look here, these are the cycles. The white line shows halving, and the red line represents the pattern from the past year. Starting here, showing the price will decrease from here to here, then from here to here, and again from here to here. This mark signifies meaning and the price hasn't decreased yet. However, if you take a look here or check the previous chart, you see that the price has actually dropped over the past year. This is essentially what occurs, the phase you are seeing here. This is before halving, and following that, this phase here, well, this is after solving. The price will increase here. Similarly, you can observe that the price will rise, but it needs to go further, and after that, it will likely decline. So this is the pattern that has been followed in the Bitcoin chart. Based on that, the cycle was created, and if you look closely, almost the same pattern is being followed in all 3 cycles. Now, let's discuss what will become significant in the first quarter of It's important to note that there are 4 quarters, and we need to determine how we can make informed investment decisions based on these time periods. So, first of all, you can see the first quarter of where 2 significant events are expected to happen. Okay, one of them is the pullback in January, and the other one is the pullback in March. Now, what exactly is a pullback? If you take a look at the chart of this blog, it's about Bitcoin. So, somewhere you'll notice that in the year I'm discussing the significance of 2025, there's a kind of pullback where prices rise by 30, 38, 14, 15, and several percent, then recover. So, what is this pullback? Why does it occur? And why will it happen in 2025? We are going to delve deeper into this topic. So, why is there a pullback in the year 2025? To understand that, we observe this recurring pattern. Now, if I speak generally about it, the year right after the halving, the price tends to rise immediately. This makes it the most successful year for Bitcoin over the past decade or so, spanning 10 to 12 years. For instance, the halving occurred in 2016 and then again in 2020. The halving happened in 2024. Okay? Now, what happened the next year, 2016 became 2017, and Bitcoin performed very well in 2017. After that, it went into a rally for 2 years. And then when the halving happened in 2020, Bitcoin performed very well in the next year, 2021. So if we look at the data of 2017, then in 2021 also, that is, if we add 4 years, then it had to perform well in 2021 and it performed well in 2021. This occurred because 2016 plus 4 occurred in 2020. So it did well in 2017 plus 2, 4. If it did well in 2021, then 2021 plus 4 means that 2025 is therefore a significant year for Bitcoin. The reason for this is that based on the previous data, Bitcoin is expected to perform exceptionally well this year. The last peak year was in 2024, and now in 2025, it has been 4 years since its peak performance. Therefore, according to these trends, is anticipated to be a highly opportunistic year for Bitcoin and the entire capital industry. This is because the price of Bitcoin significantly influences the performance of the cryptocurrency industry as a whole. That is why I'm putting more focus on the year 2025, as there are greater chances of the price reaching its highest point during this year. Now, whether the exact same things will repeat or not, we will have to wait and see in the upcoming video. In the last video, okay? We will look into the percentage probability of whether these things will repeat or not, and we will explore that later on. But before we dive into that, let's take a moment to understand why the January pullback and the March pullback happen, okay? So, what typically occurs during the January pullback is that in the United States, because most of the public or holders of Bitcoin are based in the US, the January pullback is influenced by the actions of investors. If, in accordance with US laws, you have recorded your profit prior to the 1st of December. Alright, so let's say you decided to book it in December. In that case, you are required to pay tax on that profit gain by March. However, if you choose to book the profit in January, you will still need to pay tax on the profit gain, but it won't be due until before March. Now, what occurs here is that the years 2021, 2017, and 2025 seem to follow a pattern. This pattern is notable because Bitcoin provided good returns back in 2017 as well. Bitcoin provided strong returns in 2021. So we anticipate that if you examine November and December of 2024, Bitcoin will have delivered good returns, meaning those who profited likely held onto their Bitcoins throughout 2024. They might be holding off to sell it until January 2025 in order to defer paying taxes to next year instead of this year. This is one of the primary reasons why, whenever Bitcoin performs well, it's quite common for it to experience a pullback within that same year. This occurs because people are booking their profits at that time. Another reason for booking profits is the March pullback, which typically happens in March. As people are liquidating their holdings during that period, so that we are able to pay taxes in the newly created currency. I truly hope you have understood this. The year 2025 is significant because Bitcoin has consistently delivered excellent performance in the following year. Do you understand? Currently, there will be a pullback occurring in both January and March during the first quarter of the year 2025, specifically in January. The reason behind this is that individuals have already made profits and are holding off to book those profits. So when 2025 arrives, they plan to sell in January. allowing them to pay taxes by March 2026. Additionally, those lacking enough cash liquidity to cover their tax obligations will need to liquidate their holdings to pay taxes in March. So, what we can observe is a pullback of approximately 25 to 30% occurring in the months of March and January. Now, if you take a look at the chart, this is specifically the chart from the year 2021. On this chart, you will notice that there was indeed a noticeable price drop in January of 2021. Furthermore, you can also see that there was a similar price drop that occurred in April of 2021 as well. The reason behind this is that we can examine it from the viewpoint of a pullback. What occurs in this situation is that individuals either liquidate their holdings or decide to book their profits. As a result of this, the pullback takes place. Therefore, we must be prepared for this pullback, which is anticipated in the first quarter of 2025. We need to be absolutely certain that it will happen and that the market will eventually recover. Now let's move on to the second quarter, all right? The second quarter of the year 2025, I've combined Q2 and Q3 due to the summer effect. Now, what's the summer effect? In Europe and the US, from May to September, wealthy elites go on summer vacations. Okay? Right now, these things may seem out of the box to you, but when I show you the start, it will become clear to you. So when these people go on vacation, there is not much movement in the industry or in any industry for that matter. Okay? So we call this the summer effect, in which people go for vacations, due to which there is less movement, investment is less, and because of that, profit is also less. This chart shows Bitcoin's average monthly return from 2010 to 2024. In other words, the monthly returns for January of the years 2010, 2011, 2012, 2013, and 2024 have been aggregated and averaged. Similarly, the returns for the months of January, February, March, April, and December have been calculated. You can observe the results right here. Over the past 14 years, Bitcoin has provided an average return of 10.5% in January. Meanwhile, in February, it has delivered approximately 17%, 12% in March, and 35% in April. Now we will note this, 35% in April. Then it starts to decline in May. May, June, July, August, September. All right? Here it declines entirely. Then in October, it gains a bit of yield, and in November, it increases to 1. Finally, in December, it almost means it is quite low compared to how it was in November. All right? So if we take a closer look, we can see that these 2 months, which are April and November, have provided exceptionally high returns. Okay, and the reason for the immediate price drop following this period is because starting from May, as we previously mentioned, from May through September, individuals, specifically the elite class who already enjoy financial freedom, tend to go on vacations. As a result of this, the overall movement, meaning the trading volume in Bitcoin, decreases, and consequently, the returns also come to a halt. And in the month of November, when they depart in April or arrive in November, then the price tends to rise because there's movement and fiat currency flow occurs, which means USB enters the market. This happens in Bitcoin investments and so on. So if you examine the yearly average, you'll notice that September yields the lowest return. However, if you desire a good return, you should either send in April or wait patiently for November. So here's what you should expect. In the third and fourth quarters, any profit you make up until April should be booked, because from May through September, the market is expected to crash. If you secure your profits in April and then reinvest during August and September, you can potentially book profits again in November. Now, let's go ahead and examine whether this actually occurred by looking at the real-life chart. So these 2 circles that you see displayed here on the screen, all right, they encompass the period from May through October, which means up until the end of last September. And you can observe here that the price has decreased in this area, all right? So this is a common phenomenon known as the summer effect. Because of this, the cash flow in the market decreases, and consequently, the returns in the market are also lower. We can likely anticipate this happening again in 2025 too, okay? Now let's move on to quarter 4. In this quarter, we will discuss something that is highly focused on results. The first point to consider is the year 2030. The initial halving took place in 2012. So by 2013, which is the year following the halving, the maximum return was actually achieved in November. Now, in 2017, the peak return was once again observed in 2016, which is when the Bitcoin halving occurred. And in the year after the halving, the returns were favorable, with the highest return being recorded in December. And then in 2021, when the halving, in 2020's halving, the best return was in November 2021. As shown in the chart, November gives the highest return. Therefore, based on the analysis of past data or historical trends, we can infer that November and December, mainly November or December of 2025, are likely to provide an excellent return. Hence, if the price reaches an all-time high in 2025, it will probably occur around December or November. Prior to that, if it climbs to 1 lakh, 1.5 lakh, or 1 lakh and 30,000, then we should anticipate that the price in November will surpass that level as well. The basic principle of Bitcoin is that in the year when halving occurs, its price tends to peak around November or December of the following year. However, I'm not asserting that this will necessarily occur in 2025. However, we have the ability to learn from historical data, and we can even be quite hopeful that patterns will repeat themselves. At the very least, if history does not repeat exactly, it might rhyme a bit. Leaving aside November and December as January comes and goes, there could be some fluctuations. Still, I do not support the idea of an extreme opposite occurring, where some kind of miracle happens. Now, let's move on to our assumptions about what might happen in the year 2025. First, there might be a brief and intense market. This is because compared to past cyclones like those in 2012, 2016, and 2020. So when compared to that, there are a lot of positive aspects in the cycle of ore. For instance, Trump's blockchain infrastructure is getting ready. And there are numerous other things we discussed in the previous video. Because of these factors, this bull run is quite special. However, it can also be assumed as assumption number one that it might be of a short duration, as it has been typically until now, which means it will likely end by December. But still, Bitcoin might reach $1 to $270,000. That's assumption one. Secondly, it may last longer, ending in Q, so it could extend to Q and Q up. However, in this scenario, the price will only rise to approximately $150 and will not exceed that limit. This is our second assumption. The third assumption could involve a critical cycle. This means it will reach its peak in November of this year, followed by a decline starting in December. Then next year, it will enter a phase where it consolidates, leading to another decline. After the halving, it will rise again, resembling the typical cycle we discussed earlier. So, these are the three assumptions we are considering. If you want my personal opinion, there's a 50% chance this cycle will occur, consolidating for 17.6 months, forming a banana shape with fullback for 15.6 months, then losing for 12.3 months. A typical cycle has a 50% chance, while a long normal cycle has a 30% chance. The reason is that many external factors could propel it forward, causing the bull run or expected return to impact the first half of. I believe there's a chance of this happening, which could yield astonishing results. I hope I've clarified how the cycle works and why the perspective is crucial. In 2025, the quarter 1, quarter 2, quarter 3, quarter 4. What can we expect and when should we book our profit? What are the chances of the 3 or 4 assumptions occurring? I'll see you in the next video. Until then, bye bye.